Okay, there we go. Okay. Okay, everything is set. Let's get the ball rolling. So welcome guys, welcome to Not Capital. I myself, my name is Alex. I am the team leader of Not Capital. Um, I work with other three guys. They're the three guys that I work with. So those guys that I work with, I taught them everything that they know, and then they joined the business. Okay, so they also do mentoring. So that's if you are in the premium group, you'll see they're there. They're the ones who are doing a lot of interactions and stuff. Then yeah, then here on the free group, basically what we were supposed to do was to send results, but then I was like, you know what, instead of sending results, let's try to send some analysis here and there, and then you guys can see at least some before and after pictures, and then you can be able to take some trades whilst you are looking at what we are doing. So if you can be able to take some trades, if maybe then you still want to learn some more, then you can be able to make money from the free group, and then you can be able to join. Mind you, when we make people pay for the groups to join, the premium groups, it's not because we want the money, it's because we want people to be serious. What we realized is that when you give people things for free, they don't become serious. So if someone pays something for it, then that is when that someone will be serious way on. You understand? So that's the reason why we do that. So like as I've said, and as I've mentioned, the way we operate, the amount for education, it's 400 USD. We break it down like you pay 50%, 50% we start teaching you, and then 50% is 200 USD, and then 200 USD you take it to deposit into your account, and then after that, as we are teaching, we are taking trades, and then we'll be able to raise your 200 USD to 200% by the space of less than 3 months. We give yourself 3 months. We don't have to trade with pressure. There is no pressure. Okay. So even if when we are learning, there is no pressure, we take time. All right. So in the space of 3 months, after that, when it's 200%, then your account will have almost $600 somewhere there. And then you pay back the balance, which is $200. Then your account will be left with 400 USD. And then you continue trading like normal, right? So it's a win-win situation. Nobody loses. So guys, here in Not Capital, what we trade what we call nature's theory. Okay, we trade what we call nature's theory. So when you look at the charts, they look nice and simple because it is nice and simple. So what we basically do here when we are trading nature's theory, we are trading what we call impulses and correction. So nature's theory basically it's how the market moves. It's the characteristics of how the market moves. So if you understand how the market moves, then you can be able to anticipate the next move in the market. Okay. So by understanding what nature's theory is, this is then now when we understand that the market moves in two phases. Any market, it doesn't matter which market you are trading. It can be indices, it can be forex, it can be what you call those ones, VIX, it can be stocks, whatever, it can be crypto, whatever you are trading, the market moves in two phases. That is an impulse and a correction. Okay, it's an impulse and a correction. So that is basically how the market moves. And when we trade, we are looking for the next impulse. That is basically what we are looking for. That's why when you see our entries, and then when you'll see that, hey, those big red candles or those big green candles, is because when we trade, we'll be looking for the next. Okay, somebody's entering. Let me just admit someone. Excuse me. Okay, admit. There we go. Okay. Welcome. Please do mute yourself. Okay. Thank you. So when we trade, we are looking for the next impulse. We are looking for the next impulse. So we let the market tell us where it is gonna go next, right? So those are the basics of how we trade. We trade nature's theory. Nature's theory is the characteristics of how the market moves. The market moves in two phases, which is impulse and correction, right? So when we trade, we are looking to get into the next impulse, right? By getting into the next impulse, we have to check where the correction is taking us, right? So now, another important thing that you must understand is that when we have this impulse and correction, I spoke about impulse and correction. When we have these impulses and correction, we have two types of corrections, right? We have two types of corrections. So those corrections, they form now what we call patterns, right? Within those corrections, we are going to find what we call patterns. And then those corrections, we have what we call a continuation correction. That is the first correction. And then we have a reversal correction. That is the second correction. So the name already says it, right? Continuation, it means what? We are continuing, right? We are continuing. So if it's impulse, if we are on a downtrend, it basically means that we are going to continue to the downtrend. If we are on an uptrend, we're going to continue to the uptrend, right? So that is basically what impulse continuation correction means, right? And then reversal also, the name states itself, reversal. We will be reversing the trend. So if we were on a downtrend, we'll be reversing the trend to an uptrend. If we were on an uptrend, we'll be reversing a trend to a downtrend. So those are the basics, okay? So those are the basics. So what you need to understand here, or the formula that we use, which is very, very important, right? It's number one, you must understand the trend of the market, okay? You must understand the trend of the market. So you know if we are on a downtrend, what will be happening. You know if we're on an uptrend, what will be happening. So you need to understand the trend of the market. After understanding the trend of that market, that is then now you get to understand the phase which the market is in, right? It's the phase in which the market is in. So the phase is either impulsive or corrective phase, right? That is the phase that you'll need to understand. And then the third thing will be nature of the market. What is nature telling you? What is nature of the market telling you? Are we correcting or are we impulsing? That is the question that you'll be asking yourself, right? And then from there, when nature has told you that, how are we approaching, right? We get to know or understand the pattern now. What kind of pattern did we get? What kind of pattern are we forming? What kind of structure or bargain? Somebody's texting me. What kind of structure are we forming there, right? So those are the questions that you'll be asking yourself. And then from there, you simply go to your entry. Basics, done. You understand? So those are the things that we'll be looking at. So now, here, I have this USD CAD, right? I have this USD CAD, guys. I have this USD CAD. So this USD CAD, I'm using it for example. Oh, no. Okay. So this is USD CAD that we'll be using as an example, guys. Let me just take this out. Okay, good. So this was USD CAD. So now we are going to define what an impulse is, and then you'll understand what we mean by nature's theory, and then you'll be able to see what is happening here, right? So here we have an impulse, and then we have a correction, and then after a correction we have what? An impulse, right? So now, if you were listening to me, guys, if you were listening to me now, if you were listening to me, tell me, if we are talking about correction, right? If we are talking about correction, we say that there is a reversal and there's a continuation correction. So when you look at this one, what kind or what type of correction? I know you haven't done a lot, but when you look at this one, what kind of a correction do you think this one is? Because remember, we have an impulse, correction, right? This is the correction. So what kind of correction do you think this is? Between the two, we have a reversal and a continuation correction. So what kind of a correction do you think this one is? Let me leave it there. Before I continue, guys, give me something.
It's a continuation.
It's a continuation, right? It's a continuation. Good. So now, it being a continuation like this, right? It being a continuation like this, you need to understand, okay, now you know that, all right, we are from a big impulse. Now we have a correction, of which now my correction is a continuation, right? And then now, if we talk about the first thing here, right? These are just things I'm just using for educational purpose, guys. We haven't even started with how we analyze, okay? This is still the basics. We're still trying to understand what exactly is the nature's theory is all about. So now, if you take, let's say, for example, a trend line here and connect it to here, what you can see, remember the formula, what you can see now is that number one, on a trend basis, on the bigger time frame, we are on a downtrend, right? We are on a downtrend. And then from there, it being on a downtrend, what type of phase are we in, right? We are on a downtrend, yes. And then this, what's happening? What type of phase in? We're in the corrective phase, right? So you understand now that we are in the corrective phase. So now, when you look at the corrective phase, you ask yourself the second question: what is nature telling you? What is nature telling you? We have this corrective phase, and then nature is telling me that what? It's a continuation correction, right? It's a continuation correction. So nature is telling you that we're in the corrective phase, and then the trend is a downtrend. You have a corrective phase, and then the nature, it's a continuation correction, and then the pattern that you have, we have what we call a bear flag, right? This is a big bear flag. I don't want to get inside these structures. So this is a big bear flag. So understanding that now we are coming from the correction, from the impulse, correction, which is continuation, which is again a bear flag. This means that our next move will be to the downside. We are already anticipating an impulse correction, impulse to the downside, right? So when we impulse out of the correction, the moment the market breaks outside of this correction, we activate what we call the 90% rule. So what the 90% rule is that when the market breaks out of a correction, it comes back to where it started, right? It always comes back to where it started. So what do I mean by this? For example, let's say, for example, we have a market which is going up like this, right? Let's say this is our area of significance, right? And then that's the thing. And then we have a market which is going up like this. 1, 2, 3. Okay. Right. So let me just put it like this. So we have a market which is going up like this, right? We have a market which is going up like this. We can see it's an uptrend here. We're going up like this. Then now, hey, my drawings are not that nice, but yeah, you can see I tried. Let me not mess things. So now, what we can see here is that the market is going up, and then now the market breaks out of our ascending channel here, right, which is a reversal correction. It breaks out of our ascending channel, and then after it breaks out of our ascending channel, we get this first flag, and then from there, this activates the 90% rule. The moment the market breaks out, it activates the 90% rule. So it simply means that the moment this market breaks out of here, and we get this correction here that we're looking for, the market is going to drop all the way to where it started. That is what we call the 90% rule, right? That is what we call the 90% rule. So that is, let me go down. That is the same thing that happened here. We are on a downtrend, continuation correction, bear flag, 90% rule activated, we broke out. Then we are going, and then our take profits, obviously, will be all the way to the downside, right? So our first entry will be here, our take profit will be at the bottom of the channel, and then our last take profit will be here all the way to the downside. But obviously you'll take your profits here and then wait to see what is happening. Wait to see what is happening here the next day, right? And then the market will continue or reverse, right? So you don't want to find yourself taking trades here, okay? You don't want to find yourself taking trades here. You don't want to find yourself taking trades here. Either it be a buy or a sell. You don't want to find yourself taking trades here, right? Because you don't know what is going to happen here at this point of inflation, right? For example, let's say, for example, we had this position coming nice here, but this one I'm sure there is a good entry on the lower time frame. But for you to be sure, what you're gonna have to wait for, you see, for example, this is your signal. You have this push now, you have this push or this big bull flag, and then followed by a correction, right? You have this impulse followed by a correction, then this is your entry, 1 2 3 impulse, then your take profit will be 90% of this correction. Simple. You get out with a lot of profit just by that move only. You understand? So that is what you need to understand, that what type of correction are we in? Are we continuing, or are we reversing? Those are the type of questions that you must ask yourself. All right. So now, guys, moving forward, now that you get that, you understand that what we are doing here, we are actually trying to get the next move to the downside, right? We're trying to get the next move to the downside. So usually we would enter all the way up there, and then our stop loss is usually 15 to 20 pips. So let me just do 15 for educational purpose. So now we have like a risk to reward of about 1:59. That's like 59% of whatever account that you have, right? Just from this move. So remember, guys, this is the weekly time frame, and these moves, they happen on all time frames, right? They happen on all time frames. So this is the weekly time frame that I'm using for educational purposes, but these moves, they happen on all time frames, right? So meaning that for this one, for example, this one, it took about, let's say, 15 May up until 24 July 2017. So the same move on the 1 hour can happen, right, for the same risk to reward ratio. So it's all about what exactly are you looking for. Do you understand what you are looking for, right? So if you understand what you are looking for, then you are on the good side of the market, right? That is what gives us the edge over the market. Understanding where the next move of the market is going to be. So we don't just enter trades, right? We don't just enter trades. So for example, if this trade, for example, was still, let's say, please mute your mic.
Sorry.
Sharp, sharp. All right. So if this trade was still here, right? If this trade was still here, we understand that we have the impulse, and then now we have the correction. But then this correction is still incomplete, because for us, a correction to be complete, it must have at least 3 touches and a good middle section. That is a lesson for another day. But then this correction is not yet incomplete. So that's why if I find a move like this, I know that, all right, this correction is incomplete. I have an impulse, I have a correction here, there's a nice middle section. Then here we had this big impulse, which is most likely going to give us a correction and then go to the upside before we break to the downside. That is basically how this move would play out, and that is what you'll be waiting for. So if you want to take buys, you can still do that with this analysis, you understand. But if you know where the money is, it's just a matter of waiting, and then you just wait for it to play around. Let me just give it a play. There we go. Okay, it's the impulse. Then we go, move down, 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 down. Okay, we'll pause. So by just understanding the whole or the bigger picture in the market, then you can be able to understand what is going to happen next, right? What is going to happen next. So now, let me do this before I, okay. So now when it comes to the analysis, guys, this is the tricky part. When it comes to the analysis, guys, because I asked a simple question. I was like, okay, uh, are you familiar with Falcon, or do you understand Falcon? You understand? Because in everything that we do, that's why usually in our course we take 3 months, depending on what you understand. But if you have an understanding of Forex, that's good. Because some people don't have an understanding of Forex at all, and then you have to teach them what Forex is, and then after that you have to teach them the strategy. So guys, what you need to understand is that you will not be able to grab everything in one day, right? That is number one. You will not be able to grab everything in one day. So for you to be able to be consistent, right, it is a learning process which you must be willing to take and learn almost each and every day. It takes a lot of time. Okay, it takes a lot of time. Some people, it takes them a longer time, some people take them a shorter time. So for example, I was introduced to Falcon, I think around 2020. Yes, that's when I started trading this way. 2020, the whole of 2020, no profits, nothing. And then 2021, when it started, uh, things started to be clear. And then, yes, you know, with time, you get to learn. Now it just become part of your subconscious. You understand? So it's just one of those things. It's like a school. You can't go to school for one day and then the next day you expect to graduate, right? So with that being said, now let's go and take a trade, right? Let's say we want to take a trade. Let's say we want to take this trade here. So guys, what you need to understand again now, ne? I think something that I must also leave you with. Let me just do this. Let me put the structures back together. Okay. So what you need to understand is that as much as this is an impulse and this is a correction, right? You can see this on the weekly. This is a correction, but inside here we have a lot of impulses. We have impulses and corrections inside, right? So that basically means that inside a correction we have impulses and correction, and inside an impulse we have impulses and corrections. Okay, that's what I'm saying. So inside here, this correction, we have these impulses and corrections, but overall the structure is a correction, right? So if we jump down to the smaller time frame, for example, let me just go to the daily. So if we jump down to the smaller time frame, which is the daily here, what we're going to see here on the daily is that we have this, you see, this is an impulse, this is a correction, this is an impulse, and then here this is a pullback, right, which gave us this impulse, and then we get this correction, and then we get this impulse, and then correction, and then impulse in the form of a correction, impulse. You see, that is basically what the market is doing inside here. So inside here, this structure, there's a lot of trades that you could have taken, right? So it does not necessarily mean that because this bigger structure is saying that we are going to sell, you must just be waiting for the bigger structure, right? It doesn't mean that you must just be waiting for the bigger structure. Okay, so there's a lot of trades that you could have taken here on this trade. There's a lot of trades that you could have taken within this structure. So if even if you now, if we look at this, okay, yeah, this one is a good one. Let me just check this one out. Yep, we have everything that we're looking for. So now you understand that inside here we have corrections and impulses, right? Now look at this. What is this? This is a correction, right? This is a continuation correction. We have an impulse, we have a correction, we have an impulse, right? So this is a continuation correction. We have an impulse, correction, impulse, right? So this is a continuation correction. So inside this continuation correction, guys, we have trades that we can take. So if I go to the smaller time frame, for example, the 4 hour, if I go to the smaller time frame here on the 4 hour, we can clearly see that inside here there are trades that we could have taken. For example, here's the first trade here. There's a trade here. This trade, we have this impulse, and then from here the market just trickle, went up, and then here there is a trade here, there's a trade here, all the way to here. Then from there, again, there's another trade here. There's a continuation, right? So impulse, correction, continuation, right? So these are the trades that you could have taken before this big trade. Before this big trade came to play, right? So as you can see here on the bottom, we have 1, 2, 3 touches. 3 touches, perfect. Then your structure is complete. Remember what I said, 3 touches, then your structure is complete, right? So not necessarily mean that the structures will always be 3 touches. Sometimes they can be 2, sometimes they can be 4, but 3 touches is the one which always works out the most, right? So if you are doing a lot of back testing and stuff, you'll get to see it, right? So even here now we have this as an entry. Using our strategy, we have an impulse, we have a correction, right? We have a correction here. Let me draw it nicely. There we go. We have an impulse, we have a correction. This is an entry, right? So obviously, like I said, remember, you'll be timing that third touch there, and then your take profit will be at the top of the structure, right? The take profit will be at the top of the structure. That will be your first take profit. So knowing that impulse, correction, impulse, top of the structure, and then obviously you'll be taking this to here as your take profit 2, and then your take profit 3 will be at the 90% of this bigger correctional structure, of which it gave you almost a risk to reward of 18, which is a very good one, right? So that is what I wanted to show you here, guys, to say that, okay, inside these structures, inside these big structures, we still have impulses and corrections, and we still have trades that can be taken inside those structures. Okay, so let me just quickly go to the weekly. Okay, now we're back to the weekly. So you must be asking yourself, okay, so now that we've reached the 90% of the structure, what next do we do? Right? Do I still take a trade here or what? The answer is no. You do not take a trade here. This is your take profit. This is 90%. What you need to do now is to wait for the market to tell you what it's going to do next, right? So if the market breaks this level, usually it corrects underneath or give you a correction to continue, right? So you'll be waiting to see if this market is going to give you a correction to continue to our next area, which will be here, right? So you'll be waiting to see if this market is going to give you a correction to continue, or if it is just going to reverse from here, right? So if it gives you this correction that you're looking for, since you were looking for that correction, then you just enter your trade as it is. So let's just put a play here. There we go. Okay, so we have a bottom, we have a top here. So this looks something like it might play out like this. Okay, so let's play, right? Already played out. Okay, to remove this. All right, good pause. So now what we can see here, right? What we can see is that we have the impulse, and then now what is the market doing? The market is forming a what? A correction, right? And then what type of correction do you think this is? We are impulse, correction, impulse. This looks like what? Another continuation correction, right? It looks like another continuation. Here at the top we have 1, 2, 3. So we'll be waiting to see if this market is going to break to give us the 90% rule. This will be the 90% rule. Already here we have the 1, 2, 3, and then our first take profit will be here. So we'll be waiting to see how this market is going to react. All right, so now it means that, let me just move that. Okay, let me play this with that. Okay, so now the market is just trickling to the upside. So this will be our area of interest right about here, somewhere there. So you see from here, from reaching the 90% of this structure here, what I wanted to show you was that, let me pause. Okay, so we just went up correctively there. So you see from reaching the 90% of this, structure here, the market started correcting to the upside, right? So this was just a correction to the upside. So as much as it is correcting to the upside, we still know and understand that this is a correction, right? This is an impulse correction impulse, right? And I think this is around what was this, 2019? Okay, 2019, wasn't it the time that we had a double top? Okay, so this was how the structure is. Let me just put it nicely like that. So now what we can see here is that, guys, the market broke out, and then the moment it breaks out, obviously what we're waiting for is that we're waiting for it to get to our 90, right? So this becomes our 90 here, right? So we are waiting for the move to this area. Okay, so we still have a move which gave us this impulse correction, impulse correction. Then now we're waiting for a move to the downside, right? So it means that if you were going to take this trade, obviously you would have taken it up here with your stop loss just like that, and then you'd wait for it to go to the downside, right? And then, okay, as you can see, the way it's moving here, it's moving very correctively. It's moving that exactly. Okay, let me pause. Right. So now I want you to notice something. I want you to notice something, guys. I want you to notice something on these two particular moves. Okay, so you'll be asking yourself, why did this move not go to the downside? Why did it not break to the downside, right? Why did it not break to the downside? Because I just said that if it breaks this upward channel, it's going to go to the downside. So now what you need to understand is that it is about how did the market break your structure, right? It's about how did the market break your structure. So what you want to see, you want to see your market break your structure, impulsively, not correctively, right? You want to see your market break your structure impulsively and not correctively. Because if it breaks correctively, then it has a high chance that it will go to the upside. So looking at these two views here on our left hand side and on our right hand side, let me just check something, guys. I have trades running here. It's 12 o'clock. Let me quickly check something. Fuck. Okay. Okay, it's not looking good. All right. Okay, so let's quickly get to it. So now, what we have here, right? What we have here, when this market broke out here, and what we have versus when this market broke out here, these are two different things. So what we have here, this market here, it gave us a small correction, right? We have impulse, correction, impulse. It's fast. So here we have this impulse, and then now the market just started trickling, right? It just started trickling, right? And then as it was doing that, let me quickly remove this. As the market was trickling, it was forming some sort of a structure. Okay, it was forming a structure. So let me do this. Let me just put it there so that you can all see it. So this market is forming a structure there. Okay, so let me remove this. Let me remove this. So this market here, what you can see now is that, oh, it is still that it's no longer the same as this one, because now we have an impulse. As you can see, this is an impulse, right? We have a series of green candles. Then now we have, instead of instead of impulse, correction, impulse, we had this move going to the downside slowly, right? So this move is the one which gave this impulse. And then when you look again at the bottom, like I said, 1, 2, 3. And then here on the third touch, we got that push to the upside, right? So it's not a matter of just going to look for 1, 2, 3s everywhere, guys. It's not a matter of just going to look for 1, 2, 3s everywhere. There are 1, 2, 3s that will play out, and then depending on where the market is and where what structure is telling you, that is what will guide you on how to take that particular trade. Okay, so don't just jump into a trade because someone sent a signal or someone sent something. You have to go and understand exactly what is happening in those structures, right? So someone was going to say this is a sell because this is an ascending channel. Someone who says that they are from Falcon, but they don't really understand what is happening exactly. So for us, we understand what exactly happened here. We've been using this strategy for a long time. So we understand how this market was moving. We understand that coming up here, we have this market impulse, correction, impulse, correction, impulse, correction, impulse, like this. And then this is just the bigger flag, right? So once you understand the phases of the market, that is all. That is basic. That is all. Once you understand the phases of the market, that is all. That is why you'll see or find my chart looking very clean, because there is nothing much to do. You understand? I don't have to draw a resistance. I don't have to draw a support. I don't have to put an indicator for nothing. You understand? Because I need to understand how the market moves. That is it. So once you understand how the market moves, you will be set for life, guys. You'll be set for life. I'm not kidding you. You'll be set for life, because those are the basics of how the market moves. The market moves in impulse. This is the correction. Okay. This. So this. Okay. So this is what I have: impulse correction, impulse correction, impulse correction, impulse correction, impulse double top. Right? Now we are from the double top, impulse back, flag, right? So impulse back, flag. So we went from the double top, which is a reversal. Now it means that now we'll be waiting for, obviously, short position. We'll be waiting to short this market. Can take a risk entry there. We'll be waiting to short this market to come to the downside here. So let's just see. Let's just play it out like this. We have this impulse, right? Then after this impulse, we had this correction. So this was your entry. And then now, you see how it just melted. And then obviously this was going to be our first take profit area here. This was going to be our first take profit area, right? When this market was coming. And then we'll monitor the next area, right? But ultimately we're waiting for, boom, TP, right? TP hit. So now ultimately you have that 90% rule being met, right? That 90% rule has been met. You have the double top. We have this kind of a formation here going up now. It's a bigger formation. Still did not change. See, just because it broke out here, it broke out to give you this double top, and then it came back inside. If I can extend this for you to see, it came back inside my structure, and then that's where I got the flag. And this flag for me, this is the signal, right? This is the signal for me to sell. You understand? This is a signal for me to sell. So I do not have to wait. I do not have to go and when the trade gets here, go there, sell, just because you are seeing a double top. You understand? Or just because, let me just remove everything. Or just because someone, let me just do, this. Just because you have support and resistance like this, and then when the market comes here, you start selling. Guys, that is very, very dangerous, because you don't understand what, just because it's a double top, it does not mean that it is going to reverse. Okay, it does not mean that the market is going to reverse. Okay, just because you see a double top, it can come here and spike, push through the double top before it goes down, and then it can still be a double top. For example, if I can just give you, can see a double top here. This is a double top here. This here, right about here. Let me just say DT. Right here, there's a double top here. We have a double top right here. So you can see that if you were to enter here, guys, remember this is the weekly time frame. So if you were to enter here, were you going to be able to manage this drawdown, right? You're gonna think that no, it broke the previous resistance. For people who trade support and resistance, they'll think that okay, this is a resistance, and then you're expecting that oh, it broke. Now we have a green candle, so you'll be expecting that from here you'll be expecting that from here the market is gonna go up, right? And then this will be the next resistance waiting. So okay, it broke support, now it's gonna go up, and this will be the next resistance, which is very, very dangerous, guys, because now you don't understand what exactly is happening. So for us, we understand that we are from the impulse correction, right? Let me draw it nicely. Correction like that. 1, 2, 3. The 1, 2, 3 is there. Okay. 1, 2, 3. And then how did we get there in the last? We got there correctively. This is another ascending channel. So we have this ascending channel. We have this impulse correction, ascending channel, bear flag. We have an ascending channel inside a bear flag. So this gives it even a higher probability. So now if you look inside here in this ascending channel, you have, let me just put it in another color so that you can see it. This ascending red won't be as it is okay, this is white. So this ascending channel inside, you can see there's a 1, 2, 3. Then you have this 1, 2, 3. Then you have a 1, 2, 3 inside a 1, 2, 3. So this is your entry, sniper. You take to 90%. The moment it breaks here, 90%. Simple. Impulse, correction, impulse. So you must expect that when a move gives you an impulse, when a move gives you, let's say for example, when a move gives you an impulse and then gives you a correction, you must expect that this impulse and this impulse will be equal, just separated by this correction. So now what you'll be expecting is that if you have, for example, what do I mean by that? What I mean by that is that if I have this as the impulse and this as the correction, I'll be expecting that this next impulse here will be equal to this impulse. So if I were to date back to, let's say here, on my third touch like that, and then this was the impulse, this is the correction, and then now I know that okay, now I have my 90% rule set there, as this is my structure, right? So this is my structure, guys. Okay, so I have the 1, 2, 3, everything is set. I'll be expecting that this move will come all the way to here, but does it match that this impulse and this next impulse, will it be the same? So if I just use my bus pattern here, I could just go here and take this last, let me just do this. There we go. From here, so I'll be expecting that the next impulse would be something like this. But knowing that we will not be greedy, we're going to take our profits here, right? Our take profits will be here in the 90%. But this gives us that accurate precision to say, okay, this market is going to break, and then this will be the next impulse, because it must be equal to the previous impulse. Okay, so even when we are going up like this, it's almost the same thing, right? We have this impulse before the market rested, correction, and then impulse like this. So it's almost equal, right? Even though it's not equal, you can see that it's almost there. It's almost the same thing. It's almost the same thing, and it's almost equal, because that is what the market does. It has a tendency of repeating itself day in and day out, right? So those are the basics, guys. Okay, let me just, okay, it did exactly that, right? You can see even how it played out from here to here to here. It's almost the same way, and then now the same way, the same thing, it's repeating itself. So what has happened here, let me pause. What has happened here has repeated itself here. What has happened here is repeating itself here, right? So that is what the market does, guys. That is what the market does. It repeats itself day in and day out. Let me just quickly check if I have time here. Oh, shit. I have time. Okay. Okay. Moving. All right. Okay. Right. All right. So let's do this. Where do we go? Okay. So now, say for example, let me just open GU. Okay. So now, okay, let's just do the last part. So now, let's say, for example, you want to analyze your charts, right? You want to enter the trade today. You just opened your charts. You want to enter a trade today. What are the things that you're going to be looking for? Remember what I said? Trend, phase, nature, pattern, and then entry. Okay? So those are the things that you'll be looking for when you go and enter your trade. Okay? So now, what I'll be looking for in a market like this now, understand that number one, if I zoom out here on the weekly, I'll go to the weekly time frame. I'll understand that, okay, this market is in a downtrend, right? We can all see that this is a downtrend. So now from there now, what you need to understand is where are your areas of significance, or where are your area of importance. So your areas of significance or your areas of importance, those are the areas wherein you had a large volume of buyers or sellers coming in. Okay, you have a large volume of buyers or sellers coming in. So what do I mean by that? If I can just okay, let's go to 2012. Okay. So this is our market, right? So this is our market. So by finding a significant zone, what we mean is that by where a number of buyers and sellers come in. Number one, if you look at this area here, this area, you had buyers coming in, right? This area here, where is it? This area here, buyers came in. This area here, buyers came in, right? So now you will be trading this area versus your left hand side. So whatever you are trading on your right hand side, you'll be trading it against the left hand side. That's the basic. Those are the things that they don't tell you. Okay, so whatever you are trading on the right hand side, you'll be trading it against the left hand side. So what do I mean by that? What do I mean is that if you have a market, let's say you have a market like this, okay, all right. So let's say you have a market like this, right? Let's say you have a market like this. So this market here, what we can see from this market is that this market is pushing up to the, it's in an uptrend, right? It's pushing up. So now, when it's pushing up, what it does is that it leaves areas of significance, right? So this is an area of significance, this is an area of significance, and then this is an area of significance. So in these areas of significance now, what do I mean by whatever you'll be trading on the right, you'll be trading it against the left? Is that now that the market is broken out, it's coming down. When it comes down, where is the first area that you will be looking for the market to reverse? If it's still an uptrend, it will be here, right? It will be here. Then it means that here, now the market comes through, it pushes, and then when it passes this area and breaks these lows, your next area that you'll be looking for a reaction in the market on your left hand side would be this area. So now when this market comes to this area, this is where now you'll be expecting a reaction from this market. So from this area, it can either reverse or it can give you a continuation correction, right? So it broke out, and then after breaking out, where's the next area? This area. So in this area, the same thing, right? So if we take this into practical, let's say for example, this is the market that we have, right? This is the market that we have now. So if I can just let me just say take it, let me take it here, okay, so let me take it there. So now looking at this, when I'm going to analyze today, you will understand that okay, now I have a market, we just did that, and then now when I look here at the bottom, this is the weekly, right? This is the weekly, so I'll just zoom out a bit. So on the weekly, this is my area of interest, and then I have this as my highest high, okay. Let me do this. So now from here, what's happening, you can see here we have this double bottom area. So this would be my area of interest. A lot of buyers came in, as you can see. And then now from the upside, what was happening is that now that I showed you when we're going down, right? So now when the market is going down like this, I showed you when the market is going up. So when the market is going down like this, the areas of significance that it leaves, these are the areas that you'll be looking to take trades out of when the market comes back, okay? When the market comes back, these are the areas that you'll be looking to take trades out of. So as we can see here, the trend, the higher time frame trend is the downside, right? So now what we can see here is that the market came here impulsively, it pulled back, sorry. Then this is an area of significance, right? Then from there, it broke, it went down, it pulled back. Then this becomes our area of significance, right? Right there, the wick. So you'll be expecting that now the market has pushed down from here. We'll get a continuation to complete this move before anything happens, right? So that is basically what we'll be waiting for, right? So now let me just remove everything now. I have this, and then now I have this as my area high or my area of significance. So now I want to go and understand, okay, so these are my areas. Okay, so you'll be asking yourself, okay, you found your areas, then what's next? So after that, I just simply go to the daily time frame. So this is what we call multi-time frame analysis. That is what we use, ne? We use what we call multi-time frame analysis. So with multi-time frame analysis, it helps us to understand the market in a holistic view, okay? It helps us to understand the market in a holistic view. So now, here we are on the daily time frame. This is what we have. 1, 2, 3. The market is pushing, impulse correction, impulse correction. So now what we want to see, is what is nature telling us, right? What nature is telling us, or what phase. Remember the questions. the trend, the phase, the nature, and then pattern, and then entry. So now what we can see here, okay, we're from the downside, and then I can see something like a structure forming here. You can see something like a structure forming here on the daily. It's not yet clear. So this is what I only have now on the daily. If I can just clone this, I don't have nothing here at the top yet, but I would be anticipating that this, whatever happens on the bottom side, happens on the top side. So I would be anticipating that even here, when this market comes here, we'll be expecting it to go to the downside now. So what will happen now? Let me just play and wait. Ish, too fast. Okay. So this was our area of significance. So now what we want to understand now, we are here on the daily. Ish, let me go back again. Okay. So this is our area of significance, and then within this area of significance, we have this small area of significance right here. Right? We can see this is where the market pushed and then it stalled. Ne? It pushed and then it stalled. Let me put this here. It pushed and then it stalled. If I go to the lower time frame, this is a correction. Pushed and then it stalled and then it continued to the downside. So this will be the areas that we'll be looking for. So when we go to the 4-hour time frame now, let me go to the 4-hour time frame. This is where now I start asking myself questions like, how did we get there? How are we approaching, right? How are we approaching my area of significance, right? What is the pattern? Am I getting a pattern when the market is getting there, right? What is nature telling me, right? So now what you can see here, guys, if you look at this, this is an impulse. This is a correction. This is an impulse, right? But then now, if you check between this impulse and this impulse, these are two different impulses, but they are both impulses, right? So what type of impulse do we have here? This is an impulse. You can see high momentum candles moving to one side. I did not define impulse. So an impulse is a set of high momentum candles moving to one direction, right? And then a correction is a set of both green and red candles, or both buy and sell candles moving slowly with low momentum. Okay. So now what we have here now, we have candles going up. We have a slow momentum going up, right? So what we do now here, we want to understand, okay, if that is the case, do we have a pattern here? Do we have a pattern to can take this trade, right? Do we have a pattern to take this trade? How are we approaching our zone? How are we approaching our area? So as you can see, we have the impulse, and then now we have this ascending channel. I don't know if it will allow me to, when was this? 2011, okay. Maybe it will allow me to, okay, data point not available. Okay. Okay, pause. Yeah. Supposed to be here, and then daily. Okay, so all right, let me do this. Okay. So this is what we have, guys. This is what we have. So you can see how is this market approaching our areas, right? So now what you want to see here is that when the market is here now, it does not allow us to go to the 1-hour time frame. So what we can see here in the 1-hour time frame, we're still in an uptrend. So we cannot just come here and say, okay, because the market has gotten to our area, we're going to sell, right? So what we do, we wait. Okay. What we do, we simply just wait for the market to play out. Either it can break here, give us a flag. Let me get this. Either it can break here, give us a flag to go down, or it can go to our upper area, then come back, go to our upper area, come back, flag, then go down, right? So those are the things that you'll just be waiting for. Okay, so let's just play. It's just being patient, right? So this is what happened here. It's just being patient. So we have this structure which is complete, but then now here we have this last push, and then now this is our entry. This is our first entry here. The moment we see this retracement candle on the 1 hour, it will be good. It will be nice, right? We have something that we call the 1 hour retracement candle that helps us to enter trades. Like I said, guys, we can't learn everything in one day. Okay, so we have this push now back here. From there, this is the flag that I was talking about, and then this is the continuation that we're talking about. Then our first take profit area would be at the 90% of this correction, which is here. So there's no need to be greedy, right? There's no need to be greedy. The moment you get in here, you have your TP, you have your stop loss, 15 pips, 19%. That's a risk to reward of 1:19, just like that. So the moment you get there, and then it goes, there we go, TP1 hit. Now look at this. Why I was saying this is your TP, right? Remember what I said. When the market gets to your 90% rule, you will see a reaction. So now look at this. The market was flowing nicely here. And then from here, when it got to our 90, then the reaction happened. So here we can expect, if it can give us this, and then you can see it will be giving us this nice head and shoulder formation like that, right, to go to the downside. So now if you were someone who is greedy and you are still holding, look at, from 19% it would have retraced to 11%, roughly 11%, right? Let's say roughly 11%. From 19% it would have retraced to 11%, and then you were still holding. Of course it will go to the 19%, but will you be able to manage this? That is the question. Because now we are talking about big accounts, guys. We are talking about big accounts. I'm not talking about your typical 100 rand, 1,000, 5,000 rand account. Okay, I'm talking about some 10,000 USD account. Can you be able to hold this move to go back? You understand? Because let's say for example now you have a 10,000 USD account, right? You have a 10,000 USD account, and then from that 10,000 USD account, it is running some at 19%, right? 19% is almost 1,900 USD, and then now it retraces all the way to your profits. The moment you come back, your profits now, they are running 1,100. You have lost 800 USD from floating. Your profits are running 1,000. Actually, 1,100. How then do you manage? You understand? Because now that will affect your psychology. Whereas if you knew that, okay, this is my area of interest, I'm going to close here, and when I close here, I'll wait for the market to develop further. I'll wait for the market to tell me what is it going to do next, right? I'll wait for the market to tell me what is it going to do next, and then from there, I'll be willing to take another position based on if the market gives me that which I am looking for, right? Based on if the market gives me what I'm looking for. If it doesn't, then you'll wait for the next setup. That is basically what we do. If it doesn't, then you wait for the next setup. You see? Did that pause? Let me pause. So this is what we have. We just had a small correction. I did not see that because we cannot go to the smaller time frame. But obviously, if we could go to the smaller time frame, I was going to see it. So we have a smaller correction here. We have a small correction here. So I couldn't see this. I can't see this because of, yeah. But then, yeah. So when we go to the smaller time frame, this is what we have, right? So you can see now, again, now you have banked yourself an extra 9%, right? An extra 9%. Is it 9 or is it, no, it's not 9, 15 pips. Another 19%. So from here to here you have 19%. Then from here to here you have 19%. So from 2 trades you have banked yourself almost 38%, 38%, right? So just like that, from 2 trades you have made so much, okay? But then if you were somebody who's greedy, who were holding your trades, yes, you still get to here, and you still get the same, the risk to reward. Like, look at it. Let me take it to 15 pips. Okay, you still get the risk to reward, the same risk to reward of 41%, right? But then you were clever enough to say, no, here I'm closing my trades. I'll wait for the next trade. You close your trade, you waited for the next trade to play out, and it played out accordingly, right? So you did not have to manage or deal with emotions. So just like this one here. So if we look at the time here, right? Let's say this is just on the 4-hour time frame. This is 12 October until 14 October, somewhere there. So it's almost 2 days. So 2 days there, 2 days here, done. Instead of the whole of 5 days holding one thing, you wake up, today it's 1,700, tomorrow it's 2,000, tomorrow it's 500. It does not make sense, okay? So you just have to wait for your setups to come to you. Then like this, you are out, you are here, you are out, and then you wait and see how the market is going to develop. How the market is going to develop. How is this market going to develop? See, these are the things that you wait for. Or this would be my first take profit area. You just wait for how the market is going to develop. See, this is my first take profit area. I took my profits there, and then now the market started doing its thing. Then we have this, whatever it's doing. But you just let the market do what it's doing, right? So my first take profit area was going to be on the outside structure, which is this one. So from here I was expecting this to, it did exactly that. Then look at how it came to my outside structure. Look at how it came to my outside structure. So this is not an impulse. This is not an impulse. You can see that the moment, the way it's moving, it's a very corrective impulse, right? It's a very corrective manner. So this is a correction. So we have impulse, reversal, impulse. Simple. Then from there we have the impulse, then whatever happens next. Okay. So guys, let me hold it and stop it there for today. Let me stop it there. Let me do this. So guys, let me just open the platform for questions now. And remember what I said, you won't learn everything in one day. This is just a piece. Of what is there, okay? So yeah, let me open up the field for questions, and then we'll call it a day.
Okay. I'd like to say thank you a lot, Doc. Thank you a lot. I really appreciate the class, and we're learning a lot here. You know, in some people can pay so much money for such information. This is marvelous. Thank you.
Sure.
I have a few questions.
Sure.
Let's say, for example, the market is in an uptrend.
Yeah.
Then it's forming in a rising channel, right?
Okay.
That rising channel at the end of the market there by the third touch, right?
Yeah.
If it forms a continuation pattern, right? The continuation pattern, is it stronger than the reversal pattern, which is forming like a rising channel or a rising wedge whatsoever?
Okay. It depends on a number of factors, right? Remember, when we're trading, we'll be looking for a number of confluences, right? So it's not just a matter of saying that our market has gotten to our third touch, or to say, this is the third touch, the market must go back. That's why I was saying that even the double top, you cannot just say this is the double top, the market has touched here twice, so it's gonna go back, right? So we
Yes.
will build up the confluences based on what is happening right there and the understanding of what is happening right there. So if you have the
Yes.
market which is on an ascending channel or a rising channel, like you say, and then on the last leg, you get to understand. Remember what I said: trend, phase, nature, pattern, and then entry, right? Then at the
Okay.
last leg, once you understand what type of pattern you have, is it a reversal or is it a continuation? You don't say that because this continuation is inside a reversal, then it is not strong. No, it is what
Okay.
it is. You understand? It is what it
Okay.
is. It is going to continue to the direction that it is intended to go. If it was going to the upside, it is going to continue to the upside. If it was going to the
Yeah.
downside, it is going to go to the downside. So it means that
Okay.
there are other confluences that are happening outside, right? So again, another
Okay.
thing that you need to understand is that if it's a continuation, okay, fine, it's a continuation. Let me just give you something like, okay, okay, so all right, okay, let me just do this. Uh, okay, so let's say we have uh, an ascending impulse. Okay, we have, yeah, let me do an example like this. We have an impulse, we have a correction, we have an impulse, right?
Okay. Okay.
And then we have an impulse, we have a correction, and then we have an impulse, right?
Okay.
So now, the important thing that you need to understand here is that, okay, sharp, you understand that, okay, we have a continuation correction, right? You have a continuation
Yeah.
correction. Then
Yes.
now, we know that this is the 90% of the continuation correction, right? This is the 90% of the
Yeah.
continuation correction. And then we are saying that on the outside of the structure, it looks like, let me do this. I want to put this, yeah, this aspect. Okay. So now, what we have, number one, is that what we understand is that the moment the market breaks out of our continuation is going to go to the 90, right? So now we
Yes.
have a new leg forming. So now what you want to understand is how is this market? So now we have a new zone here. How is this market approaching? How is it going there? You understand? So this remains the continuation as it is, but the next impulse is your next question. The next impulse is your next question. So you have this impulse versus this impulse. So you can have an impulse as a correction, right? So as a
Okay.
correction, you know that this is the one that is going to break out. As much as
Okay.
we are from the impulse, correction, impulse. It can be something like
Okay.
this, right? It
Okay.
can be something like
Yes.
this. Then you can have
Yes.
this impulse, correction, impulse, and then this impulse will just be correcting like that. So it means that now
Okay.
you're just waiting for this to go to the downside. And then with other
Yes.
factors, included inside, it will show you what exactly is going to happen. Aban.
Yes.
Yeah.
Yeah.
So
Okay. Yeah. Okay. I know. I understand. Understand. Basically, what you're saying is, it's about what's happening right now and what you are seeing right now.
yes, you don't trade what you feel like the market is going to do. You don't trade
Okay.
like, because based on what what is happening, you can see a continuation. Then if you see a
Yes.
continuation, why are you taking a reversal trade? You must ask yourself that. You understand?
Yeah.
Because if you see
Yes.
now, you see a reversal, why are you taking a continuation trade? Because you know you can see it, everything is there.
Yeah.
But then you go and
Yes.
open Instagram, you find my Nando say buy, you find who say sell, you understand? You decide to say, Mara, it can be a sell. Then you take a sell, the market goes there, it chows you understand? Then the next thing
Yeah.
you get frustrated, you know. So it's a matter
100%.
of building up on what you know and what you understand. You can go to
Yeah.
other people just for them
Yes.
to see, well, okay, this is what I have. Not for them to change your bias. No, no, no. No one
100%,
changes. No
100%.
one changes your bias. Your bias is your bias. After all, in the
Yeah,
market, it's all about probability, right? It's all about
100%.
probability. What can happen? So whatever we analyze,
100%.
we are not saying that we are 100% sure. We are saying that
Yeah.
based on history or based on what we know or what we have seen the market doing, this can happen next. So it's
Yeah.
probability. This can happen next. If it doesn't happen,
100%.
oh well, I stay back and then I wait for the next move. You understand?
100%.
Then you
Yes.
grow slowly but surely. You'll get there.
Thank you. Thank you.
All
Thank you.
right.
Thank you. Thank you. Thank you. Yeah, no, I understand, my man. Ish, let me just hustle for the thing, then I'll just pay for maybe like next month. I just wanna pay rent and stuff. Then for the next month, maybe I'll be able to pay for the premium thing course.
And no problem, my G. I'm always around myself.
Yeah, yeah. But I took a sale on GU, man. What do you think?
G, let me just put. Okay, let me just take GU. Okay, this one is looking interesting. Let me just quickly check it out. This one looks like. Okay, there are two things that are happening here on GU, né? That I
Yeah.
can see here on the daily time frame. So what I can see here on the daily time frame is that I have some sort of
Investors, shut up.
yeah. That is the first thing that I can see. But then let me just go to the weekly to understand what is happening here in the weekly. Okay. So here in the weekly, I have this. I won't go far. I have this daily. Okay. This is supposed to be my area somewhere there. Okay, so I have this is an inverse head and shoulder. Okay, let me go to 4 hour. Just trying to figure out what's happening here. Because I once sent out this buy here. This buy, see this buy here? I once sent it out.
Yeah.
Okay, let me just check this one. So, okay, now we have to understand, okay, how did we get here to this area? You can see we got here very correctively, and then impulse. And then we have this impulse, I have this correction, impulse, correction, I have this impulse. Then I have this here. It's not beautiful. Okay. Okay, so now I have 1, 2. I have this move here, which can do, from what I'm seeing already, without. But let me just put this. Okay, it can do this before it goes. Yeah. So now understanding here on the 4 hour. Let me just quickly go to the smaller time frame. Okay, I also have. It's an area that I should mark. So this area, I also have this area here. Then from there, this would be my area of interest. Then I just go to the 1 hour quickly. So this is my area of interest here. Now I have to see how did we approach. Okay. This one is just a nasty price action, man. Like the way it is just nasty price action. Let me put it like this. Because what I'm seeing here now, né? The fact that you can see that here on this area, we did not really get there, right? We did not really get to this area. And then here, as we can see here, we had this nice descending channel which gave me that 1, 2, 3 charge. And this 90% is there at the top. And then now what we are forming here, we have a pattern that is forming here. I have this first touch, now this is my second touch. So what can probably happen is that, okay, this here I can see we have this impulse correction. We can just have a small push to there. We can just have a small push to here, and then we are gone.
Okay.
This is possible. This is possible.
Yeah.
We can have this move to this. If this area here stands as our main double bottom, because what I can see, because you can obviously see
Yeah.
here, even on the 1 hour, it has broken out of this downtrend, right? By doing this,
Yeah. 100%.
by doing this. So it can either do that, or there are two plays on this one. You cannot just say this is a continuation. It's a bull flag, but it's an expanding type. So an expanding type, it
Yeah.
can also come here before it goes to give you this third touch here.
Third touch. Yes.
Before, and from here it can now go up
Okay.
like this.
Yeah. Okay. Yeah. So I've understood what you're saying, because you know what I did.
Yeah,
I saw this. You see where where your mic is?
yeah. This one.
No, left. Go left. Where
Left.
this? Where?
This one.
Yeah. Yeah.
Okay.
There. I saw what we have a rising channel whereby it showed an impulsive movement to the downside, then to this lower low, then this correction there going to the upside. Then I thought it might continue down to the downside.
But remember,
Yeah, yeah,
remember, remember. It's
yeah,
the same exact question that you were asking, right? It's almost the same
yeah,
question that you were asking.
yeah,
As to if you can see that we're getting to our area of value, where now are we going to go? You understand?
yeah,
It's all about
100%.
what is happening here. So you can see we
Yeah,
have this impulse, and this impulse is very corrective also. Then we have this
100%.
correction now. But then this whole
100%.
move, this whole move, this whole move here is giving you an inverse head and shoulder. Just that I don't want to go back to because okay, if I am to draw structure by structure, I can just do this. If I'm gonna draw structure by structure, I could just okay. I have this as my previous low, and then this one. Then this would be my highest high. And then if I go to the daily. So me, I don't go back too much in time, you understand? So that's why my analysis is straight to the point, because I
100%.
don't go too much back in time. So this is what I have.
Yes.
So you see. So from what I can see here on daily, see it's the same structure. You see? So we broke the low, we came back, we are correcting. This is a good entry for a buy. This one is just a good buy, because if it's like this now, so 4 hour. So 4 hours actually like this. So push. This was our area of significance. Ne? This was our area. We pushed out, and then now we pushed back in. Structurally, we are forming a correction, which looks like it might give us this inverse head and shoulder type. Yeah, yeah.
Yes.
So let me just check this. Something what you said. I'm seeing something. Yeah, impulse correction, impulse. I'm seeing something here. Let me do this. Because if you can analyze it like this, so if you can analyze it like this,
That's what I did.
uh, it's a risky one, because honestly speaking, that's why it does not make sense.
It doesn't make sense, right?
No, it does not make sense. It does not make sense because
Okay.
this thing, like you're looking at this price action, you can clearly see that this whole thing is choppy, messy. It's a correction. This whole
100%.
thing is a correction. Number one, this whole thing is a correction. And from what
Yeah.
we can see, we can clearly see an inverse type of formation, an inverse head and shoulder type of a formation, which it can come here and go.
Yeah. 100%.
It can come here and go. Because if we are waiting for the head and shoulder, then we have this as the first shoulder, then we're expecting this market to come and play around here and go. And even inside here, there is a small one. You see it?
Yeah. Yeah. I see it. I
There's
see
a
it.
small one inside. And then on the outside, there is the big one.
There's a bigger.
And then the take profit and stop loss for, the take profit for this head and shoulder, you simply just measure your neckline to the head, and then when it breaks out, this is where it's gonna go when it breaks out.
Yeah.
And this area here is the 90% of this move.
Yeah.
It's the 90% of this move here. This 1, 2, 3. So this is where this market you'll be expecting it to come next.
100%.
So from here, what can happen with GU, if I put this and predict the future, it can take time, but I can predict the future, like it's gonna do this. Where's the thing? Okay. So from here, you can just expect something like this. Because remember, on the downside, still have an area to fill. Still have an area to fill here on the downside.
Yeah.
This area. So I expect something like this on GU.
Okay.
This correction. So just that inside here you can trade. Because you can have almost 3 waves, and then you can take it, and then that's it.
Okay.
All right.
Yeah. No. Thank you.
All right,
Thank you.
man.
Thank you. Thank you.
No, sharp. We'll